puzzles me like how to do that. And the third thing is, how do we know every week the money is going to different sectors, right? And then you write the winners, and then and figuring out those details. And it's very difficult for us to. I can't say for us, man. Like, some people might know, but for me, it's very difficult to figure out like where the money is. I usually keep staring at the screen to figure out which stock is increasing in price, where the volume is, right? And that becomes very difficult because I have to keep looking at it all the time.
Naval, one more question, please. How long calls is good, like monthly or weekly or bi-weekly? What do you prefer? Because I bought monthly before and I lost a lot of money in Amazon Tesla because premium killed and it never moved up or down.
In that subject, Naval, this is Prashant.
Excuse me, can you speak a little louder, please?
Naval, can you hear me?
How do you, the person who spoke last, but the person who's speaking, because you didn't give me your name.
Naval, this is Prashant. Can you hear me?
I can hear you, but like your voice is a little low.
I'm sorry. My question is, like, I hear admin saying that options price is high. So how to identify the options price is high? You know, we don't know that. We just thought that if share price goes up, then options will increase, but it won't happen, as Vamshi or say that option price is too high. So how to identify that? Thank you.
Yes.
Naval, this is Ravi.
Hi, Ravi.
Quick question. So can you talk about the screeners that you use to identify the momentum stocks for the day?
I hardly use any screeners, but I'll show you.
Oh, thank you.
Yeah, Navaldeep, this is Socrates. So how we can, when we can start following the trend? Example on Friday, right? US was like minus 10 points nearly at open. And then after that, like it jumped. I mean, it is ended with 40 points plus.
I'll show you.
Hey, Naval, this is Ravi.
Sorry.
This is Ravi. So if you can explain like a workflow, like, like a day-to-day workflow, like, hey, I scan these stocks in the evening, then I pick up these stocks or these symbols. Then based on these technicals, I'll add them into my list of stocks to trade. And once I get into a trade, these are the signals that I look for entering into trade, and these are the signals for me to exit out of the trade. So like a workflow, full workflow. Like if you can organize like in that particular
I'll try to explain, and then like again, everybody cannot do everything, right? So you have to. I'll explain you what I do, but then you have to map it to according to your own convenience, because almost everybody is working, right? You cannot keep an eye 24/7 in the stock market. So we will address it, how I do it, and how you can like map it according to your own time.
Yeah, that's exactly. I mean, like, based on, we're all working, right? So if you can explain your style, like, I do my scanning, and then I pick up this watch list, then I enter into trade based on these conditions, then I exit out of this trade based on these conditions, right? So typically those 5 things, right? Like how you pick up the stocks, how you, like a workflow.
And Naval, I have one question related to covered call or covered put. Like how far we will look, like maybe if we take the 200 buy call, we need to take the 220 sell call or like 30 sell call, like how we decide that? And similar question to put.
Hey Naval, this is Prasad. This question may be covered already, but I just like to know how you are picking the next day's levels. I've been trading for a while, but I'm just interested on your next day's levels. I do take a look at your messages every day, but I'm interested in knowing how you pick that up.
All right.
Hey Naval, this is Abhilash. I have one question. Like, so every time we keep hearing like hedge your profile. Like, so when we hedge the profile, like, when is the good time to close them, or when is the good time to open them again to protect our profits?
Yep.
What's the strategy we need to look for?
Hey Naval, this is. I wanted to understand how
Or do you do trend confirmation on shorter time frames? On the longer time frames, okay, but on the shorter time frames?
Hey, Naval, this is Anand. Can you hear me?
Yes, yes.
Yes, yeah. So my question is regarding the spreads. I'm a less risk guy, so I'm trying to do the spreads, but just don't see the value. Like most of the times, I think the spreads even go negative sometimes, even the stock goes up. So if there is a chance, if you could touch base on the best way to pick up the spreads.
All right. So
yeah.
One more question and then I'll start.
Yeah, Naval, quickly, this is Kumar. My question is, let's say we have a stock in our portfolio. Suddenly there is a news about a jobless gains.
Can you please speak a little louder? I can't hear you. Sorry.
So Naval, this is Kumar. So we have a stock in our portfolio, let's say some stock, and suddenly there is a news based on the economic calendar, let's say jobless gains or consumer confidence or GDP, something like that. So my question is that, what are the different major types of news that will impact our specific stock or something like that, just a high level about the impact of these kinds of news, how it will impact on the stocks?
Yeah,
I may not be able to answer that.
Naval, one question on the post which you already posted. Like if we see your screen on 710, you posted like UNH 330 call, it is consolidated massively. How we are determining like it is consolidated massively, or how we are detecting those stages?
Okay.
This is Muru. Hey, quick question, because a lot of time I know there are some code word people are using. Like example like the breakout and it crossed resistance, cross a support, some kind of annotation or in acronym. Is there any way I can just is there anything I didn't see anywhere like annotation? What is the meaning of breakup? What happened? You break the support, and break the support means it's good. The stock is going up or down. Those kind of information. And I know you people are like example ripping, right? I was so confused. What is ripping?
One thing, like if you do not have an understanding of breakout, breakdown on support, first I would say understand that before jumping into stock or options. You need to do the paper trading to confirm your understanding, because I don't want people to lose their hard-earned money just because they do not understand a concept. All right. So I'll explain it to you what a breakdown or breakout is. Try that with some paper trading accounts. See if it works for you. Like I'm again telling everybody that if anything works for me, it doesn't mean it's going to work for you. I see a chart with a different objective in my mind. You will see a chart, the same chart, same indicators with a different perspective. So you have to do a back testing of the same data based on your objective. All right, I'll come to that. Two more questions and then we'll close the...
Yeah, Naval, this is Amar. I want to know how you position your trades in the position sizing. Like, let's say you are buying 5 different options on a given day. How you position each trade, how much money you put on each trade, and is it depending on whether it's a short-term one or long-term one? Want to know your approach.
Okay.
Thank you.
Naval, how do you analyze the volume? Like using the volume profile or anything else?
I'll show you. So, okay. I think we have more questions, so we can start.
Hey, Naval, do you follow anyone on Twitter?
No.
Oh, like for analysis, like, can you give us any names so we can at least learn them?
That is the problem which I will address. Start analyzing your stuff rather than following anybody else. If you keep on following, you cannot enter the positions of the same person. He might have 1,500 different positions. One thing may work, one thing may not work. And if you are on that, you may not even know what happened there. Right? So when you're trading, you need to trade on your own analysis. All right. So
okay. Naval, one last. This is
sorry, buddy. You can post a question in the chat. I'll see.
I posted it, but I want before you start, maybe you can start with like the pros and cons with technical analysis, or if you already have that plan, that is fine. I just wanted to
See,
find
it's
that.
not a pro and con basis. I'm going to show you how to do a trading.
Okay. Yeah.
You need to determine whether it works for you or not.
Okay. Okay. Go ahead.
Right?
Sorry. Yeah.
Right. So first thing first, the most important thing which people are not able to comprehend or figure out that what do I do to pick up those stocks or levels? All right. So I'm using a dummy account in TOS. I hope you all can see. The simplest option or simplest, let me come up. I'm not going to do this. I'm just going to create, let me open one more chart, which is a blank, and then I'll start from there.
So which one is this, Naval?
So before I jump into the charting, right? The first and foremost thing about the market is that you have to understand which stocks you want to track. There are about 15,000 stocks which are there in the market, which provides you option trading and futures trading. Most of us are not even into futures. We only do the option trading. So you cannot go and pick up any like a berry pick and pick that, yes, I want to trade all these options. You cannot do that. You have to define your own watch list. For me, my watch list is this. I only look for the big stocks which are worth above 100 billion or about listed in Dow Jones index or Nasdaq index. I don't go in any other stock because I don't know how they are going to behave. This is my watch list. See, I trade in Apple, AMAT, AMD, Amazon, BA, Baba, BAC, Beyond, CAT, Cost. You will not see any small or penny stock anywhere. And when I put a trade based on my levels. I verify them. I check them. I see if they're moving with the market, if they're not moving with the market. And then I dive into them and then pick up my charts to evaluate, yes, whether it is worth trading or it's worth avoiding. All right. So let's see, chart is there. Let's start from SPX.
And Abel, can you mute everyone?
Where is that option? I hope everyone is mute now. Okay. Let me clear the drawings. See, first, this is my SPX chart. This is a plain chart which anybody will see. And this is the daily chart. All right. Now, there was a question how to figure out what is a trend and in which direction the trend is. You see, this was the highest point and this was the lowest point. We always look for the chart when it moves from right to left. What do you see here when the chart is moving from right to left? Oh, left to right, sorry. Left to right. It is going up, right? It means the trend is up. This is on the daily basis. Now, where do you see that how it is going to give me resistances? How is it going to give me a support? We'll see. First, the simplest thing we need to do is we need to add a Fibonacci retracement, which is from the topmost point on the chart. I'm using the daily chart. You can apply this to the weekly charts as well, just to make sure that, yes, it looks appropriate. I choose my topmost point and I choose my lowest point, right? It tells me that, yes, I was here in the month of February 19th, and I went down to this. Unless and until I have my lowest level, I may not be able to use my Fibonacci series. Now, what do I see here? I see that as soon as I dropped here, I started to move up. how much I can move up. I can move up to this percentage, which is 23. This is the Fibonacci percentages. If you go to any drawing chart like TradingView or any of the charts, you will see that yes, these Fibonacci numbers are still like same percentage wise. So when we talk about trends, we need to see how the stock or the index is against these numbers. So first come first, let's see. It came to 23.6 and you see that it's taking the support. So people who want to see that what is the support, you need to understand that yes, the candle, let me just expand this. The candle here came, it closed right underneath 23.6 level and then tried up and then came back, but it tested. It didn't went down and close. Here it opened, it closed up because it's a green candle. Here it opened and it's still touched it but closed above it, right? It means that the index has taken a support here. And I've explained in the past that when you are trading the candles, you need to see how the candle behaves. So look at here. If I see my market has taken the support, next day, if I take my position, as soon as the market opens, I entered here. Now I see my candle closed right on the 38.2 percentage, plus it is right at the high of the day. It closed near that. Now I have entered here. Now my support right now or my stop loss will be this 23.6 percentage. So this level will act as a support for me in the index. I am long here. This is my stop loss. Right now, next day when my candle makes, it is still half of my candle. I always trade candle based on their width. This is the body of a candle, right? Whenever I am trading a candle, if it is a day candle, it's a 30-minute candle or a 15-minute candle, that my next candle, if I'm long, my next candle should be closing above 50% of the body of my last candle, which I have entered. So if I've entered somewhere here, my stop loss, my closing stop loss will be this. My intraday stop loss will be the half of the body of this candle. So here I have entered anywhere here, I will see my next candle. My next candle opened here, closed there, but is still above the middle of my last body. Plus it also is above an important support of Fibonacci, which is 38%. The important supports in Fibonacci are 38.2, 61.8, and 100. 23 and 50, they are basically used for retracement supports, but 38.2 and 61, they are used for breakouts. So here I saw that yes, it's not touching my 38.6 percentage. I'm taking it. I'm sure on my candle that yes, I should be going long. So look at the direction. Can someone put the phone on mute?
Ewan.
You see the direction, like let me just take a screenshot and copy the screenshot on Paint. See here, I'll choose this brush. I've not used Paint in so many years. Yeah. You see, the market is going in this direction, right? There was a support here. It's very thick. Sorry. Let me choose more. This one. The market is going in this direction, and first support was here. Next, I took my entry here. I am keeping it entry. Okay. Now at this point, I see if The next candle touches half of my candle. The answer is no. So I hold my position here. Next day I see if my candle touches half of my this. The answer is yes, and it closed above right there. The red candle is the candle which opened here and closed here. The white candle is which opened at the bottom and closed in the top. So it's closing above my benchmark. So I'm going long. So 1, 2, 3. 3 candles I play at most. Fourth candle is my profit booking area on the daily charts. So as soon as I go 1, 2, 3, fourth candle, it still opened above, came, but no, I want to book my profit. That is my profit booking area. The fourth candle. You can apply this logic to 30 minutes. You can apply this logic to 5 minutes. That once you are in, try to book your profit on the third candle. 1, 2, 3. And you need to make sure that when you are doing intraday, the candle should not come below half of your last body in the candle. That's one aspect. Now, the other aspect here is that was my trade. Now, what should I make in my mind that yes, this is the support going forward, or this is the support, or this is the resistance? You see, once it crossed 38.2, it touched 50%, and then it was trying to retrace. Every time it goes up, it comes back to the 50%. It goes up, it comes back to the 50%. And you see that here, it has not gone down. It means people are buying at this range, in this area. So if I'm long, I will be trying to enter at this moment, which is about 50%. And if you see, many times the 2790 on the XPS was tested. Market used to go above 2930, 2940, but came back to 2790. It was in the month of April, I guess. Yes. So this is how it was facing resistance. The resistance was 61. This level and this level are for breakout and break zones. These are the levels which are tested for support. Every time there is a break of 38.2, it will try to go up to 50%. Every time there is a break of this side, this will be tested. And if it is trying to break here, this will be tested. If it breaks 50%, then it will go down to 23.6. So these are the areas where you see support on the daily charts. Now let's see what happens. Now, as soon as you see, first there was an inside day here in the candle, right? And if I entered on the 50%, which was right here, that yes, it touched the support and closed right on the support, opened right on the support and then closed there. If I enter somewhere here, 2980, 2960, I should be good because I have a limited stop loss, right? If it breaks down, it will go big. So I have a limited stop loss. So I see that yes, the close for this daily candle should be above 2790. Now, as soon as I do that, I have my first candle, I have my second candle, and third candle. Third candle, I book profit. I am booking my profit. Also, I realized that on my third candle, and I'm not talking about any indicators, I'm just telling you how to trade candles. We will do the confirmation of these candles with the additional indicators. If you understand candles first, that will be a really, really good way to trade. Now look here. We were here and we entered here 1, 2, 3. I am exiting right at this place. It tested the support of 61.8, tried to go up, but my logic says if it is closing above 61.8, it should move only up. Every time I try to enter, My second candle says no, it's going down, exit. So if I entered here again, it will letting me exit. Then here it touched the support. So it's again an entry point. Now I see my entry point. Here, 1, 2, 3. I am out right there. You will see this pattern as soon as you enter the third candle. Prominently will be a candle where you will see some profit booking or some exit. So I exit. I try to see if market goes down somewhere near 29.30 so that I can enter again. It did not. It only went up, up, up. It touched the 78.3 percentage, and then as soon as it touched, it breaks out. This is the breakout when you see the gap up. We'll see the same thing in the stock. Now here it went up, but it did not test it the 100%. It retraced back, and it retraced back big. As soon as it came down, it retraced back big. It tried to test 61.8, but it never tested. Tries to break, failed. Tries to break, failed. Came back. You see, the Vijay when post chart, he tries to show you the SPY level. When they come, but they fail to break out of this level. And it goes down. It rise up here. And if you remember, I was posting about 3185 level for quite some time now. This is the 3185 level, right? It closed above this. Now, what do I see? I see nothing but 33.98. That is the reason I am long on my trend now. Why I was short for a couple of days? Look at this, 31.38, 3138 level, right? This is the level where market was facing resistance. And we all saw that yes, market tried to break out, but come back and test this level, tries to go up and come back. Now I'm trying to enter here and see if my next candle goes up. If it goes up, I will try to book my profit in the third candle. All right. Any questions on this? I'm going to take 2 or 3 minutes.
Naval, this is Harish again. Very first person I picked the question. So question I have is, you exit the fourth day. Since you go for the shorter term options like weeklies and all, you exit fourth day to save the premium, because couldn't you not use the trailing stop or something like that? Keep going.
See, let me give you an example. Let's say you are earning 100,000 salary, right? And you get a salary bump of 15%. Will you take it or will you leave it?
I'll take it.
You will take it, right? You will take it, right? So yes. The real profit is the profit which comes back into your account, not the notional profit which you see on the screen. The dollar amount which comes back into your account is the actual profit. So let's say I'm entering on this position now. Let's say this example. I entered with my 10 lots, for example. 1, 2, I should be booking my some percentage here, some percentage here, and some percentage here. So if I'm trying to get 25, 50, 75, 100% my targets, and I have 10 lots, I will book 2 at 25%, 2 at 50%, 2 at 75%, and leave 4, because now I have taken the cost of those 4 out of my profit. They are free runners for me. On them, I put my trailing stop loss.
Got it. Thank you.
So, Naval, this is Abhilash. So when you look at the candles, do you also look at the volume, like because each?
I will come to all of that. First, you need to have confidence in your candles. Then, to confirm those confidence, we will see and add indicators.
Okay.
And these candles are in which, a daily chart or 15-minute chart?
You can use these candles like when I'm using my levels, I tend to make a 30-day, 30-minute chart. Okay. So here I see and I try to make trend lines on this chart. Okay. So let me show you how to make trend lines. You see, I will start from the 30-day period, and this is really important. You see here, right there, the market tried, came back, tested this. Can you see that? Here and right there.
So Naval, in this case, there is no, you did not draw Fibonacci.
This is like 30-minute chart. Fibonacci levels are already there. You see 78.6. It is already there. But this is a chart for 30 minutes to see how to figure out those levels.
So
now,
the
every time
Fibonacci will always come automatically, or do we need to draw using some formulas?
The trend lines you have to draw.
The Fibonacci I'm talking about.
Fibonacci will be there. Once you put that on your chart, it will be there. You have to save the styles.
Okay.
And see here that this is one area. I need to take a screenshot to explain.
So the vertical gray bars that you have there, are those for the gap up, gap down?
The vertical gray bars are practically end of day. Okay, so look at here. Every time the market came onto this side, this row, this horizontal line which I've created, either it took the support or it acted as a resistance. Now you need to understand one thing. Let me give you an example of a dam. In a dam, we collect all the water in the reservoir and let the dam hold that water, right? Now, if there is a break in the dam, whole of that water in the reservoir is going to come and burst out of the dam. Agree? The same thing happened here. It tested one time, two times, third time, fourth time, and closed above it for the fifth time. Now, this means that whatever I was trying in terms of candle has made a dent in that dam of this line. Now, as soon as there is a dent, I don't see anything right there which will act as resistance. Why? Because I need to go back to my daily chart. See, there is nothing here. See? For me, now I am entering a zone where I'm going to be very positive. Because it's going to dent into this line. If it is successfully done, I should be looking at the new all-time highs. There may be day in plus minuses, but my trend will be to break this. And once I break this, the next will be 161% of 3398.
Hey Naval, Hemant here. There is a green-red candle around, I think in June timeframe, right? Why do you think it won't act as a resistance? Like on the June 1st, if you see, there are like 3 candles up there, right?
See, it not resistance. See, here this line was drawn on the basis of 30-minute chart. That is for my intraday levels. Okay.
Yeah, what I'm saying is there's a green candle in between, right? The top of the green candle, why doesn't it act as a resistance? Because you were saying that there is an open space all the way until 3400. Does that green candle not play any prominence there?
See, that's what I was trying to explain, that there may be ups and downs. So if I zoom it, right, you see here, there was a candle and there was an inside, partial inside day on this candle. Let me take a screenshot. See here, there is a partial inside day right here. And we are going to use a couple of more indicators. but you need to see. Our basic principle is that if the next candle closes below the middle of our candle, we need to exit. So here we had to exit. That was our principle, right? Plus there was an inside day here. And as soon as there was an inside day, I lost confidence that yes, it might move up. The confirmation happened here, and this was my result. Now here I was waiting for it to test 29.34. It did not. It came close, but it never tested that. But then again, it faced the resistance here. So the point which I'm trying to make here is, you need to follow the trend, but you need to be pragmatic about the fact that your candle closure should be above the middle of the body. If it doesn't, it fails our principle that yes, we need to exit at this point.
So yeah, we need to put a stop loss at 78.6.
We need to, for Monday, yes, we need to put a stop loss at this range.
So Naval, you trade on the fourth day. You close on the fourth day, right? Do you move your stop loss every day?
I keep on booking my positions one by one. See, these are levels for ES, which can move up to 40, 50, 60 points. Stocks don't move in that much like numbers. They move 1%, maybe 0.5%. But SPX, it can move 30, 40 points. 30, 40 points gives you ample profit, right? Also, you need to understand that, yes, what is the capacity of you holding a profit? I myself, I can give you one example. I had last year, January or somewhere, where NVIDIA boss came up on the TV at 9:15 and he said that they are losing on the market something, and the stock went down from 159 to 131. I lost 30 grand on it just because I did not potentially had a exit position with my profit, and I never had a hedge. So the stock opened and my $30,000 was zero. I sold them at like $125. So I cannot control that. So the idea and the learning which I took from that was keep on booking these lots one by one. So when I'm on my fourth day, I have picked up my 60% position out of ES or SPX. Okay. So these are the candles, and this is how you make the levels. For level making in for daily trades, I use 30-minute charts for 30 days.
Naval, can you pause? I'm so sorry, Naval. Guys, still there is a disturbance. You could go on mute. I know everybody. So hit *6 if you do not have a mute button. That's the way to unmute and mute. Sorry about the interruption, Naval. Please go ahead. Thank you.
I'll mute everybody. All right. So here you see on the daily charts, we have one line here, which is 38.36, which is the 78.6%. And you see that market tends to take some support. It took it here, it took it here, it took it here, it took it here, it took it here. So it's a firm support at this range. But look at bottom then. There is no support. If you see, there is no support here. If market drops, right, we will see somewhere here. Let me draw the line. If market drops, I would like to see the support right there in this range. And that's the number 3000 I was talking. And this is the 3005 or 15 right there. The close. This was 3125, this was 3118, and this was 3115, which it made. So look at this line. Market, if I increase the font, see, market is taking support somewhere here. It was choppy, go up, go down, come here, test it, move up, come here, test it, move up, come here, test it, move up. And all of a sudden, it boom, it went up. This is consolidation. And how do we confirm all this? Right now, we are just looking at the candles, right? We add indicators on top of it. So confirm that, yes, whatever we looking at the candle, how good it is, right? So I have a couple of my study sets which I have used. So I'm going to use a simple one first. So here you will see I have a couple of indicators. One of the most important indicator which I have found is this arrow, TTM scalper alert. If you go to studies, edit studies, you will find this TTM scalper alert in TOS. This is the by default option which is there. This is a very wonderful tool for me to confirm that yes, should I go long, should I short with my candles. So here, as soon as the candle was made here, which was 3105, I was waiting for this range. This gave me a yes, I need to buy this scalper alert. And it went up, 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 up. This is like 30-minute chart. And it's going up, up, up right there. So one way of trading is you follow this scalper alert. This is really, really good. You enter based on its direction and hold it until it changes its direction. But you never know when it is going to change the direction, right? So that's why my 4 candle or 3 candle principle comes into picture. 1, 2, 3, book it. Then enter again. 1, 2, it doesn't work. Exit. Enter again. 1, 2, 3, it doesn't work. Enter again. 1, 2, 3, it breaks out right there. 1, 2, 3, it breaks out. Boom, boom, boom. You book here. You enter again and then you book here. So you keep on doing that. So one indicator we should prefer is this. Then the important indicator is DMI. This is the combination of directional index plus it's a combination of ADX. And this is a really useful indicator for me over many years. How would I know that what is the strength of this market when I'm trading, right? That if I'm going long, will I be comfortable going long, or it's going to be a weak market as soon as, see, most of the time what happens is as soon as you enter a trade, the stock fell. If you short, the stock moves up. And most of us lose the dollar or stock prices in that. So this ADX indicator is a very powerful indicator of that. Right now, it is telling me that the strength in the market is building. This green line is the strength. Building, 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 building. And now here, it is trying to consolidate and move up. In the contrast, the negative strength or the negative direction in the index, because right now I'm using index, is going down. The red line is going down. And the blue line tells me that if green is going up, how solid that green is. Until this level, the green was little vague because it was going up. So on Friday, because this is the half hour chart, on Friday, you see there was very limited strength until 2 o'clock. And then it started to move up. This means that the positive are building into the market. All right. The third indicator is TTM squeeze. Most of you use it on 30-minute chart or a daily chart. This squeeze can help you confirm that yes, there's going to be a breakout, or whenever there is a breakout, you will see that yes, there is a green indicator or there's a red indicator which is a breakdown. Continuous red, red, red can lead you to a breakout or a breakdown zone. You need to test the squeeze on daily charts, not on half-hour candles. They are much more useful on the daily charts. RSI everybody knows that yes, it tells you the strength of your stock. And MACD. Positive MACD is also they are all lagging indicators, but as soon as they cross over, they will tell you that yes, it's a confirmation. Now you can come and see and trade. So they are primarily good indicators. One of the most important indicator which I use on my daily charts is check in money. Where is that? I think I already have more indicators. Let me clean up. I'll add.
Naval, you can decrease your chart size so the indicator shows below.
How to do that? I forgot because I've set up these settings so many times. Anyways, let's not hang on to this. Let's go back to what we were doing. Okay, so here you will see all these indicators, and based on these indicators, you can take your trade. Now, why I choose United Healthcare? I'm going to show you on the daily chart. You see, there is a huge amount of consolidation happening in the United Healthcare right there. You see, all the greens and the reds. Let's do a back testing of this data. There was a lot of reds here, meaning it was getting consolidated. This gave me an arrow confirmation that yes, there might be a break. And that confirmation came and it touched 315. Okay. Similarly here, there's a consolidation going on. This time it gave me a negative indicator, but should I go with it? Yes or no? No. Just because the blue line is the strength of the negative indicator. It tells me that yes, the strength of the negative or down arrow is not much. Even the green is bad, but right now it is weak. So it can go in any direction. Here it tells me that yes, red, and it turns blue. It is still consolidating. So if ER goes fine, it should break out. That's why I was saying that it's massively, look at all this. It has been massively in consolidation, and it is being, it is going to be breakout or breakdown. But how do I confirm it is a breakdown, breakout? Look at this green zone, this pink line. Like these are my indicators, which are a little difficult for me to share, but I'll see what I can do. This, let me show you in 30 minutes. This pink line is my supply zone, and this blue line, blue graph is my buying or demand zone. So here you see I got my 30-minute indicator right there. My supply zone is right there, which is 298. As soon as it breaches this, there is going to be a massive upside because I have to draw my Fibonacci, and in the Fibonacci I see levels beyond 315 now because I need to test 315. So the first level of test will be 315. If it doesn't work out, we'll go and see the levels of this range, which is 286, 289. All right. So any questions on this? Can you let me unmute all? So if you have any questions, I'll stick here for a minute before I move on.
Hey, Naval, this is Kiran. In the DMI, you mentioned that the blue line is the strength of the green line, right?
It is the strength of both the lines.
Strength
The
of both
green
the
and
lines.
red.
So how do I determine when it shows the strength of red or green?
See, you see the green line going up.
Yep.
Whatever line is going up in a direction, right? You will see that yes, the strength in the green line is less, and the strength in the red line is also less, because they are just consolidating, contracting. On the contrary, if you see here, it says that yes, the strength of the red line is good. It can fall, and it fell from right there. It fell. But now it says it's a negative of a negative, that it is falling, but the strength to fall is less.
Okay. And how do we determine the supply and demand here, the pink line and the blue ones?
Yeah, these are my own indicators which I have got. This is basically a method to tell me where to buy and where to sell.
Is this something you could share, or is this something you bought from somebody else?
I bought from somewhere, and that gentleman helped me sign some NDAs. That's the reason I cannot share all this.
Okay. Is it something you could share with us, well, how to get those?
I don't even know. I can show you the code, but I can't even copy paste and do it.
No. I meant to say like the other gentleman's contact, so we could also benefit from that, right?
I've spoken to him. Right now he's trying to make a product, and he wants to sell that product.
Okay.
And I will get back to you, because I'm in discussion with him for my string arm as well. But string arm is also his product.
Yeah, thank you.
Okay. So anyone has any other questions on this level? All right. So let me mute everybody. Okay. So now come back
One question
to
here.
our this.
Yeah,
Yes.
how can we add the Fibonacci here?
You can add the Fibonacci. You need to make it for 1 day. And
I have one question. So we see the consolidation, and we understood like why you gave that buy signal, but based on like how you pick the particular date, like you asked us to buy the September date, right? So
yes, I
why it is
expect
not
this to
August or
move
July,
big.
like why it is September?
Because as of now, there is a ER on Wednesday. All right. And with respect to ER, I cannot play that, yes, it can be a positive ER, it could be a negative ER. I have no idea. That's why I avoid to play ERs. So
Okay, so there is no indicator for the date selection, because to avoid any like unexpected things for a year, you choose the long date.
yes, because I'm looking at a potential longer term 2-month, 3-month period where I see that, yes, even if there's a bad year, I'm not going to lose too much of premium on my options.
Okay.
And how do I check premiums? Like there are 4 factors in an option. There are deltas, which is, there are Greeks, which is delta, gamma, beta, right, theta. Delta tells you that for $1 move in a stock, how much your stock option will move. Theta tells you how much decay you will have at the end of the day, every day towards your expiry. And implied volatility. If we have implied volatility over 30%, it means that yes, that option is really expensive. See, so with 2 months down the line, the implied volatility for UNH, let me show you here. These are the columns, right? So 330. It is 263, 465. I need to add columns. This is the delta for this one, right? The delta is 0.18. Implied volatility is 30%, right? So the possibility of this running will be really, really good.
Okay.
And you can confirm this by analyzing your trade. I don't know how many of you actually use this trade for analysis. So here, if I go there and I don't want to use BA, UNH, and I want to choose all my 330. Okay. Let me analyze by trade. I'm doing a single. This tells me my chart wise that yes, how my trades are going to behave. And this is the implied volatility. I don't want to confuse you with all this, but when you want to play an option long term, you should come and analyze that the return comes. Whenever there is a less volatility, implied volatility, you are going to have a massive return. You see on somewhere it is 390 strike price. There's a very high volatility of more than 100%, right? It means that yes, people are expecting a big move right there. Such a big move. And that's the reason when I'm entering here, I'm buying option little cheap and I'm expecting a reasonable movement towards this target.
Okay, so we pick 330 because its delta is very low.
Delta is very low, implied volatility is low, meaning that even if it goes down in here, I'm not going to lose much.
Okay.
But if it runs, it will run massive.
So how much increase that tells the delta, right? Or it is.
See, as and when your delta and your, not delta, when your strike price and your stock price becomes equal, delta tends to move towards like 70 or 80. So if let's say the stock is 335, your delta will be about 85.85, right? So every dollar move in UNH will give you an equal amount of return in an option.
Okay. Thanks, man.
So now, even for 310, it is showing the same thing, right? So why do you choose 330 instead of 310 or 290?
I chose it because I liked it. Because if I go back here into my trade, I saw the minimum IV.
Okay.
And delta. It will go down further. If I want to, I would have chosen 10 for 350, but it was still the highest one. I looked for the lowest one deltas, and any delta which is between 30 to 40 is a reasonable choice for me. So here it is 1845. I can pick any of them. They are reasonably priced. But look at the price. Do I need to pay $14 per UNH? No, I don't want to pay that.
Okay.
This looks reasonable. You have to consider that yes, IV is an important factor, delta is an important factor, and the cost of that option is also a good factor. If I have to invest $1,000 and I get $1,000 in return, that's 100%. But if I have to invest $50,000 and I get returned like $2,000, it's not worth the trade.
Got
right?
it. Okay. Yeah.
So you need to be mindful of that as well.
Yeah, Naval, maybe this is a dumb question because I'm not sure about this tool. Is this TOS tool is for everyone or is it for specific trader?
It is for everyone. It's a free tool. You just need to make a paper account and then do that.
So we need to open a paper account with TD Bank.
TD Ameritrade, yes.
Okay, fine. Got it. Thank you.
Hey, Naval, one
Now,
question.
if we are on this screen, let me show you the
Hey,
options.
Naval, one question on this one. So,
Yep.
So the bid and ask is like too much of variance, right? Like, can you go to the same United Health Group? Like, so the bid says that 2.49 or 2.5.
This
and
is
the
close,
ask,
man. So there is going to be gap.
okay.
But if you look in the, like, let me open it.
My question was like, should we also look into these things, or like when we are trying to enter into the trade, if the bid and ask is too wide?
See, bid and ask will be wide because these are far options, and UNH is not a big mover. It's a slow and steady mover. If it was Amazon or Tesla, the bid and ask will be very small.
Okay.
It also depends on the volumes and everything.
Okay.
So we need to place an order and wait. There is no need to rush because we have good time. Even if we want to enter it after ER, it's all right. But I'm going to enter, I'll put a mid price somewhere in between and then leave it. And I believe that it will get executed by the end of the day. I don't want to chase it because I know it's going to get a price and then I'll buy it.
Yeah, and now one more question. Why we gave the price, like option price as 375? How
because it was the mid price. It was the mid price of these two.
Okay, okay.
Hey, Naval, this is Balaji. Like, what are the alphabets like next to the price? Say, like H, M, X, B, all those things. What do they mean?
I didn't get you.
Like next to the price, like the one you have highlighted, like 2.63 H, and then you have 4.55 M.
These are exchanges.
Oh, okay.
There are 11 different exchanges which have their own codes. So these are exchanges. So when you see sweeps or similar information from Vijay, sweeps means that across all the exchanges, there is a request for an order and it's been given to exchanges and they will execute it one by one.
Thank you.
Hey, Naval, so for few stocks, the IV is always too high. How do you pick the best one in this?
I don't trade them.
Like a Tesla and all, so you won't trade them at all?
See, I'll show you about Tesla. Let me go to my other chart, which I wanted to cover. So this is an important chart, which I'm using these days. This is called a swing arm chart. Okay. So if I use my Tesla chart right there. Now, swing arm, just to give you a brief, this is the volume profile. It means that these were the net buys at these prices. And if I go to my 30-minute chart, there was a buy. So what the swing arm means is that there is a trend. Green confirms me that yes, there is a positive trend. Red confirms me there is a negative trend. So whenever there is a green, you will see that 4 or 5 different bands, right? So every band, this is zone 1, zone 2, zone 3, zone 4, zone 5. These are the different zones for me. All right. So whenever any stock price, and when I post this chart, whenever there's any stock price which comes and which tries and come into any of these zones, I will try to buy it because my mode is positive. So I will buy it. And I will buy it until it changes my direction to red. So if we talk about SPX, right? And I'm using my 30-minute chart just because 30-minute chart is useful. My SPX chart was saying it's buy, buy, buy. Right there, it was a sell. But for the last half hour, it said buy support, and you will see this arrow. So buy with the support of 31.31. We need to go long. This confirms my other chart as well that yes, I should go long. Plus, it confirms my Fibonacci direction as well that yes, above 78.6. This 33.98 is the target. This confirms. Now, how do I use it for 1 minute? For 1 minute, like I don't trade 1 minute candle, but people use that. But just want to show you the significance of these zones. I look at here. Okay, so this is a break of the swing arm. Right there, it gives me a buy signal, buy support. If I enter here, it tells me to buy in this zone, in this bucket zone. When I'm coming in any of these zones, I need to buy it. So if I entered here, boom, 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 it's not coming in any of the zone. Keep on holding my position.
Is it an inbuilt chart or you created it?
No, man, it's again like made on order.
So where do we buy this novel?
Wait for it. I'm like trying to negotiate with that person because I paid too much for it. So wait for it. So this
is a good one.
confirms that yes, this is based on decades of his experience. Yes.
Yeah, for this swing arm chart, right? I did find that guy's YouTube video, and he did list the chart for free to be used. I mean,
it is for free, but it is for free, but free is a very basic level of it.
Okay.
Okay, so you will get it free.
We'll wait for you to confirm us then.
Yes, I'm actually talking to him. I want him to like provide us this for maybe $100, $50, so that we can all use it.
And Naval, in the meantime, he confirms that like from where we can get the free version. So we will get used to the UI and these kind of things in the meantime.
You can go to Black Flag. I have his.
Yeah, can you please ping us that one in chat window as well? So we will try to get familiarized with those.
This is his website, but he will not. Not this one. Black Flag.
It's blackflagfuturestrading.com.
Yes. This is right now for, because he's making his own tool with one more person, right? And I got some of my modifications according to me. That's why I'm saying that the basic chart will be different, and the basic chart was made last year, and there were many updates and there were many signals which were added on constantly basis, and that's why that thing is not available. I'm going to talk to him. If he can provide us for $100, I think that is more than good enough.
Is there something like a super trend?
Like if you go by super trend, you must have read about Elliott waves. So let's not do that.
No, man, I haven't read anything much, but in Trading View, I've seen that super trend.
This is 1 minute chart, so there's no super trend on 1 minute chart.
Okay.
So
hey, now
yes.
It looks like the candle bars are also more like Heiken AC candles, right? So there is a.
See, guys, if you want to do some research, I gave you the link. You need to go and download that and do it. I have only 40 minutes left and I need to close, right? I'm going to explain you what the chart does and how it does when I post.
So now a quick question. So if implied volatility is high, so you won't touch the trade or you'll go for selling an option?
I'd like to sell options, but on rare occasions when I know that, yes, it's going to touch my levels, not like on everyday basis.
Okay.
Now, I have a quick question.
Guys, we need to be holding on to questions because we have limited period and I want to cover a few more things first. All right. So this swing arm, like when I post this or when you download it, you need to understand that these are the buy zones and the red are the selling zones. So if I've entered somewhere here, that will be my profit booking zone. I should book my profit right there. And right now it was a sell zone and it was sell, and I tried to add my more positions on sell, but it hit my stop loss. Hit my stop loss, I am long now again. So once you start reading about this swing arm, use it in conjunction with your previous tools. Once you do that, you will have more understanding and more confirmation on your charts. That's one aspect. Now, the other important aspect is when you say, I pick up from the unusual options. I trade on unusual options? No. I look at them? Yes. So what do? I check them in my option times and sales. As I do not choose all of the stocks, but I choose some of the stocks. So when I'm looking at, let's say, UNH or let's say any other stock, I will have to go to trade, go to option times and sales, and figure out that, yes, what is that stock? So let's say we have Tesla, because Tesla has so many options. Okay, now I go to my options and say, I want to select all the series and I want to see quantity, which is about 500. Okay, and I press enter. But there's no series.
It's collapsed.
It's coming, it's coming. So you see, we have these contracts. 710, there was a call which was bought for 1,000 quantity. This was the price, this was the exchange, the IV was this, the underlying price was this. Now, right now, you see a column called condition. This tool will tell me whether this was a spread, if it was a spread, or if it was a buy or a sell. I need to set that information. Right now, I've not done that. So I use that to confirm whether it was a part of a spread or it was a normal, like, single option. You see, there were 3 contracts which were made at the same, 2 contracts which were made 1451.30, 1451.30 for this price, and this price. And this was for the option, these 2 strike prices and the volatile, and they were bought naked. So it means that when you see an option of unusual options, you will see many of them, and most should be bought above the ask price. If you see here, I'll go back. You will see this statistics information. If you see options which are bought above the ask price, meaning people paid more, or like, let's say there's a buyer for $100 and the seller for $110. The person who is coming to buy, he's trying to buy at $110 or $11. This is traded at or above the ask price. Now, in this case, you will see that there is a 23% of stock options which were traded above the ask, or the trade above the ask price. This gives you confidence that yes, there was a trend to buy it. When this percentage is higher, it means that there was a trend to buy and buy. And also there is a sizzle index. Read about this. When the sizzle index is above 1, it is a good indicator to buy. Right now it was 0.7. So for call, it was 0.9. For put, it was 0.58. So still it was there to buy or buy not. So when you see unusual option, you need to come and verify that yes, whether they are bought above, they are bought below, or there any equal or opposite transaction which was made. Many times you will see that there were transactions which were there and there was an opposite transaction as well, which constitute a spread. So when we look into the unusual option, we need to, unusual option will mark this. But if there is an opposite trade as well, it will not mark that. It will mark that as a separate unusual option. But for the net positions, it is zero because you have one call option for 1690 and there is an equivalent put option or equivalent sell option for the call. So you need to understand that. There's another concept of open interest, which I cannot do it today, but if you want to cover it, I can do it in the next session. How to understand the open interest and how to trade on the open interest. All right.
Now, so, quick question. There is a purple color and a green color there, right? Does it indicate whether the transaction what is bid or ask price?
Yes, these colors have their own definition. So you can see that they were bought and bid. If you go here, this blue color determines calls. This violet color determines you, what you say, puts. And they are the deltas. The trades which were, the options which were traded, 200,000 were in the delta between 0 and 20. This is really high just because Tesla moved very big in number, in percentage on Friday. If we take, let's say, Apple, right, which did not move much. Come on. The delta between the option is this. So the calls were higher than the puts and the delta was there. The higher percentage of delta meaning that yes, the calls were mostly in the money. There were only 9%. So like once you start looking into this data, you will start to get hang of it. Right now, I just want you to open the unusual option, verify the option time and sales and see if there is equal and opposite transaction, yes or no. Here you will see many transactions. Red means sold, green means buy, blue for call option, then for, so you need to understand all of that.
In this scenario, you can buy it or not? What is your opinion?
See, buy or not buy, it's your own discrete. The red says that yes, these options were sold. They must have been bought initially or they were open now. These options were sold. 340p was sold. 450 call was sold. December 2410 was sold, meaning somebody is negative on Apple. Here you will see the same similar transaction, but in green. So these were bought. So you need to add the, what do you call, the open interest, and you need to compare the open interest from last day to today, which I think Edgar is doing, and he's sharing that information to all of you. So you need to understand that what is an open interest. An open interest could be a position which is bought. It could be a position which is sold to begin with. Many times we see unusual options and we do not know whether those positions were bought or those positions were sold. That's why all the UA option doesn't work. You need to verify on which side of that transaction it is. Green and red will confirm you the transaction side, and whether they were part of a spread or a sweep or something, you will get that information right there.
Now, looks like these are like long options, but we try to trend for shorter ones, and even these can be bought it like a few months back.
You can choose any options. I'm not choosing any. I'm choosing quantity above 500. So you can choose any of the series, right? Let's say next week series, and then you choose it, and then you will see that there was a 17 July 397.5 2000 quantity option bought, and it was a delta, so it's a good trade which was taken, right? Because the delta is low, IV is low, and the underlying price was 381. So somebody is expecting Apple to move up, and on this was done on 7/10, right, which was Friday, and the stock price was 381 at that moment when it was bought. So somebody is expecting such a big move in this. It's a green. And you see quantity 1, 2, 1, 2, 1, 2. They hardly of any relevance. That's
Also,
why I
Naval, we hear
have
sometimes
quantity
like
above
Max
200.
Payne, premium killers, and those kind of things. You think
The
that
premium
play
killer is
at all?
based on this. If you have 100 IV, let me show you Amazon or Tesla, which have higher IVs. So if I open up here, no. Look at these IVs. 100, 93, 93, 95, 105, 107. Whenever there is a high IV, the possibility of losing the premium is really, really high. If you see, people bought good quantity of puts and good quantity of calls equally. Here, somebody bought at 9 o'clock. He knew something right there when the price was 1389, that there is going to be something happening. He bought 1295 calls at 118 price. You see the timestamp, boom, 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 boom. Big numbers right there. This gives you confidence that yes, there is a trend in which somebody is trying to buy heavily and is entering the stock right when the stock was 1389. No unusual option would have picked it up at that moment. They will pick it up after like 9:45, 9:46, because they will run through the process and everything and will post it there. So when you're looking at something, you need to have this there. And I was trying to set up alerts for this, but I was not able to. But there's a way you can set up alerts for this.
So, and Naval, whatever you're showing, right, the stats, that's for only for Friday, right? It doesn't show like previous week or previous market day, right?
For previous, you have to like write your own program or extract this information from an API into your database and then compare the last one to today. Or you can go to a tool called Blackbox, or there are a couple of sites which are there which provide all this information.
Okay. And if you go to the today's option stats, right, the percentage, the call percentage and put percentage. So on Monday, it's going to be 0. Everything is 0, right? So till what time you'll wait to have a confirmation of like whether to buy the calls or the puts?
See, first of all, I will see. I have my option times and sales up for 250. So on my limited stocks. So let's go back to this watch list. I cannot track the entire market. So first, I look into my limited stocks if there is any option sales or something. Second, I use Blackbox, which is the tool for which I pay some dollars. And from Blackbox, if I get a alert that yes, there is a transaction which is there, I come back and verify in my data that yes, what is that transaction? I try to break that down so as to give me a confidence. And then I see if there is a corresponding dark pool data for that transaction as well. That gives me much more confidence. Because when you go into the dark pool, plus you have unusual option and you have verified in your statistics that yes, everything is matching and it's moving in one direction, it's time to buy. I choose this way of doing it. Right?
So,
But for my stocks, because I trade, like you will see my stocks maybe on mostly on SPY, Apple, BA, sometimes CAT, Disney, because I tend to focus on these stocks. I try to understand their ways. I try to see how they behave. And over a period of many years, I've learned that how they're going to behave. So I look into them and see if they're making any movement, and I try to ride that movement.
Thank you so much for all there. So if you don't mind, can you show me like how you picked up, like, you know, as soon as your market opens in like 5-10 minutes, you picked up Roku or Walmart, right? And they run crazy. So once after a time, like by the
It's
time
not that
we see the alert and get.
I have analyzed them one night before, because honestly, I'm just a human, right? I cannot compute everything at the same time. Plus, I have my own work. So I try to go into each of these charts, which I have in my watch list. Takes me 2 minutes or 3 minutes at most for the chart I'm looking for. And then I try to see if it breaks that level, let me enter that. Based on my Fibonacci, based on my supply demand, I do that analysis upfront in the night. If it breaks that, I'm going to ride it. So when I was talking about Walmart, 90% of people do not trade Walmart. I trade Walmart, and I've been trading Walmart. I've done it with previous cases as well. I trade Walmart because it's a slow moving stock, but when it moves in a single direction, slowly and steadily. So when we gave the stock option for 731 or 721, many people say, no, we are losing it. I told them either you can hold it or you can leave it. I holded some of the options, and in next 1 day or two, I entered them once again. It moved. It moved from 121, 124, 25 range to 131. And I've been telling that, yes, if it goes below 125, we need to exit. It went down and I exit at that moment. I booked loss, but I entered again once it crosses that range. So it's something I do it before the market starts, not within the market.
And Naval, I think you used the similar kind of analysis for MCD, right? We are still holding the MCD analysis, and you said like as a long there is no stop loss or something.
Yes, in the same way, like I'm doing UNH. Let me show you that.
Yeah, because we are still holding next week expiring 200 calls. As you suggested, we have like we trust you a lot. We haven't closed them. So just expecting, hence this week is the last week expiry. Just want to understand.
Yes. So see, when I gave you this McDonald's, maybe it was in June somewhere, right there. And
I think it's in beginning of June, like first week or something in June.
Yes. So at that moment, you look at this. This crossed the supply zone and went up 198, 199. At that moment, when it came down, I was anticipating that, yes, it should give me a positive sign. But there was a heavy supply on this sky blue line. Every time I try to touch it, is getting supply. But still, is giving me the positive signals. Right? It may, because this may be a trade which we have lost. I understand that. But it is going to do a breakout.
Yeah, great. Like my question is like, do we still need to hold the next week expiry calls, or you want us to move it to?
Like I closed McDonald's in loss.
Oh, okay.
Yes.
Okay, I'm still holding them. So you suggest me to book the loss, or you suggest me to roll over? Like what's the suggestion?
We will enter in McDonald once again. Just a couple of more days, because I want there to be a little blue candle right there.
Mm-hmm.
And right now the strength of the negative is going down. I want some positive in it. As soon as I have it, I will enter it.
Okay, so take it like we need to book loss for now.
Yes.
Okay, fine.
Like,
thanks.
I cannot be like 100% accurate all the time. There will be scenarios where I will post some trades which will not work. So look at this BA, which I entered so many times. I was trading BA when it was like 140 and 50, right? Somewhere here. If you see, huh? Who's speaking? See, I was trading BA in a range of 140 and 50. And you see here, this sky blue zone, this was a supply zone. Every time it tries to go up, no, there was a supply. But as soon as it blasted, boom, it went up, 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 up. It stayed there. Now it is trying to fight the supply zone again. And it is there. But I have some sentimental emotions attached to BA. So I trade it most of the time. But it works. It works on intraday basis. I got the buy signal right there. I entered and went long. This is the supply zone right now. Range from 180 to 185. If it crosses that, it is going to be a big run. And run could be potentially 226 to 227. That is the next supply zone, which you will see. All these supply zones will become one by one. You can, I'll give you the contact to get this indicator. You can buy that indicator from a gentleman. I can give you that contact.
So Naval, based on current trend rate, so how does it look for next 1 week on BA? Can we analyze for what these indicators?
BA right now, for me, on Friday, it was in positive mode. It broke out. You see this green, yellow, and red zone? It broke out. And as soon as it broke out, I went long in it. I have a scanner for this indicator, and I'll give you the contact for that person. I have a scanner for this, wherein you buy this, you scan it, and as soon as this zone crosses it, you can go long. I think this indicator was free indicator. I can share this indicator. But this supply zone, I will give you the contact. This free indicator I can share.
So basically, until it reaches supply zone, it's not safe to trade, or what is the
like supply zone is something that yes, people are going to sell at this zone. We entered here. There was a breakout, right? The breakout is here. We ride along on it. We are on it, on it, on it, on it. 1, 2, 3, fourth candle, I'm out. It came down. I'm trying to enter again. 1, 2. So I've entered right here. So I'm expecting 1, 2, 3, 4. If it moves into that direction, it's fine. If it goes below the half of this candle, I'm going to exit.
And this is a day chart you're doing? Or
this is 30-minute chart. So this is the intraday trading.
So basically, Monday, maybe we have chances to touch that zone.
Yes, Monday, like I'm expecting something positive on it because it broke out from this zone. And if I go back and go blank and draw my machine, everything, I will see that yes, it's going in a positive direction. Okay, so let me see the questions we had.
Now, one question. So you might.
One second. So breakout, breakdown, I think we covered that. I explained to you how to see consolidation on the XPX chart on the daily basis. And once it crosses that level, there's a breakout, breakdown. Unusual option, we discussed. Chart, trading, we discussed. Trading stop loss, I explained that yes, I'm using candles 1, 2, 3, and 4. So I'm like putting my stop losses in the middle of the candle. All of them. Swing arm, we discussed. Level strength, we discussed from this ADX for small accounts. So this is important. So anybody who has this account which is less than $25,000, they feel little like missed out on many of the positions. So there are 3 ways of doing it. First, you can have a cash account and trade only on the accounts which are free, which are not like meant to be settled for next day. E-Trade, TOS, any mainstream product can give you that feature. You can have a cash account and you can trade as many as you want with the dollars which were not used in any of the previous trades. First option. Second option is to make the spreads. And when to make the spreads? Let's assume you have a position in Boeing. Okay, let me show you. See, this is one of my accounts which I use for options on Robinhood. So this is a position which I have, which I bought last minute on Friday. Okay, now if I'm in my Robinhood account and I don't have $25,000, what I will do is I will try to sell if I am in a profit. Let's say I am in a profit of $1,000. I'm not going to sell all my 10, 15 contracts. I'm going to sell 5 of them. I will wait. If it goes a little more above, I'm going to sell 5 more. If it goes above, I will sell more. This way, the price of selling the next strike option will be higher because my stock is moving higher. Plus, it is freeing up my cash and it's not giving me next day trades. Now, next day, when the stock moves up or down, you are not going to lose your dollars. The dollars which you have gained as a difference will be locked. You can close your position and you will have those dollars. The third option is you can do a butterfly. If you are getting into loss and you want to take more dollars out instead of spreads, you can always do a butterfly. Butterfly in this situation will become, I have 200 call, I will do a sell of 205, 15 lots, and then I do a credit spread of selling 205 lots and buying 210 lots. So net my call position of 205 will be 30 lots, 210 will be 15 lots buy. So for equal buy call options, I have an equal sell call option, but it will reduce my exposure. I use this strategy specifically when I'm on my long options, fire options, because it saves my decay, the theta decay, which happens on the options, right? So I make them so I don't lose too much on the premium. Plus, if there's any movement, I'm going to use that and make money because I have more contracts now in my butterfly and less cost as compared to my naked option. All right.
So now, how it is different from spreads? Are they both
Butterfly is a way of hedging. It's like spread. You will get the dollars from your strike price, right, which you are selling. In butterfly, you're going to get another set of dollars back to your account, which you could use. Because most of the time what happens is when we tend to lose, we try to hold on to that position for longer. Because we believe that, yes, it will come up, and we lose. It's with me, I believe it happens with everybody.
Yeah.
With butterfly, I get to back my dollars much more as compared to a spread, a normal spread.
And Naval, one question is like, do we open the spread at the same time, or like once the buy call, like if you are in profit, then you open the spread?
Like I try to close, like I've mentioned many times that when you are in profit, try to lock it. So when I do that, it means that I'm already in the profit, and because of my small account, I cannot sell that position that day. So I try to sell the next option so that I can lock my profit. But if I'm on the losing side, I will try to make it as a butterfly, not as a spread, because I want to take more dollar out of my trade, free them up so I can like cover that loss from some other trade.
Okay, so I mean, what happened is like I'm doing spreads for first time. For AMD, I opened a 55 call and I sold a 60 call, and very well. But thing is, when I look at the profit, I'm not getting much profit because both like the sell call, the price got increased, and the buy call, even if it is in profit, the sell call ate up it. So my stock, like the call which I picked, it ran $270 profit, but because of selling that call, like I opened at the same time, I'm in profit of only $70.
Okay, so tell me one thing. On Friday, AMD fell down, right? Did you lose anything? You lose little.
No, still I am in profit of that 70.
Lost little. If you only had $55 options, you would have lost a good amount of dollars. Spread are primarily to save your dollars. If you leave with some capital, you can trade next day. If you end up losing your capital, you will not be able to trade.
Agree.
So when you are on a losing trade, make a butterfly. If you are on a positive trade, don't make the call spread upfront if you know the trend. If you are not sure, then do the call spread to begin with.
Got it.
Or put spread. But if you know that yes, there's a trade which is going in a positive direction, let me use and take benefit of it. I will try to do a straight naked option. And once I'm there, if I cannot sell it, I will sell then the next strike price option so that I can get all those dollars back into my account.
Okay. I mean, I picked it before the alerts, around 2 to 3 days before. I thought it might move because of ER and all. And I picked the 60 sell call because...
Now, can you quickly tell like an example? If I have say 100 calls, $100 calls, how to make a butterfly if it is say now at 80?
Like I'll do it next year. Oh, I have it in here. I can do it here. Analyze it. So let me just... So let's clean this up. Let me remove them. Okay. So let's say AMD was example, right? So in AMD, let's say I took 24th July. And I'm doing it on TOS. You can do it on your own system, right? So if I had 55, so let's say I bought single 50. This is my position as of now. Okay. Now, if it goes up, I sell this one. This becomes my simple spread.
Okay.
But if I want to make a butterfly, I will do one more thing. I will go and buy $10 and I'm going to increase them to $20. This should be done when you are on the losing side. This will free up your capital.
Naval, in this case, do you use like market order? Because let's say if the gap between bid and ask is too much, this all need to
As of now, this was the last trades, and because the last trade was on Friday, there are going to be gaps. But during the date period, there will be limited differences between bid and ask.
Okay, all right, thanks.
So this way, on a losing trade, always make a butterfly, because this, if I remove this and if I reduce it to 10, I am getting my dollars back. In this case, if this was a trade, like this, I need to slice this again. So just look at here. 3 was my cost. I'm going to get 117 back because I made a spread. But if I sell them more to 20, okay, I'm getting 117 more. But I'm only paying 50. So 60 of my cents per lot are coming back to me again, right? Now, by this expiry, if stock moves up to $60, which was my initial spread, I will be in the profit because I will gain $5 between my $55 and $60 strike price, and I will also gain this 50-60 cents which I have earned, which I have sold from 60 to 65 days.
Again, Naval, like if it closes at 60, we need to, hence we have 20, 20 contracts. We still need to get 1,000 more stocks to give that buyer, right?
So if you close at 60, this 117 will become 0. This 55 will become 5, and this 65 will become 0. So you will have net gain of 5 here. You will have a net gain of 117 for 20 lots, and you will have a net loss of 580. If I take one example, one lot example, you will have 500 here. You will have 234 profit here because that's the price you sold. So your net price will be 500 plus 234, which is 734, and you will lose 58, which is about 680. So you will have about $680 profit if it closes on 60.
Like what if it closes 61 or 62?
61 or 62, you're not going to lose anything in the butterfly. As and when it moves up, let's say it goes 70, it will be a 0 profit for you. Because the cost of buying and the cost of selling cancels each other. So you will be net in no loss, no profit.
No, but contracts count wise we are different, right? We have 10 buys and 20 sells.
You have 20 buys, man. You have 10 here and 10 here. Can somebody put your phone mute, please?
Naval, in case if premium is killing, right? So then all the butterfly will have chances for loss also, right?
But in butterfly, initially you paid $3, right? Now you are paying $358 minus $234. You're paying only $1 for the cost. It bought back $2 for you, which you have invested in it.
So Naval, so put it simply, we can say like if I have say 10 calls at price X, to make it a butterfly, I will sell 5 calls at some points below and above that price.
No, that's wrong.
No?
No.
So if I have say 10 calls at 100 and I have to make a butterfly of it, those 10 calls will become the lower end of the butterfly. Then I will have 110 and 120. 110 as sell and 120 also as buy. Is it?
See, let's say we have this KMD stock, right? We have 10 lots which we have bought off strike price 55, and we paid, let's say, $3. Okay, so my total investment in this will be this into this into this. This is my total investment. Oh, sorry, 3,000. This is the strike price. Sorry, I should do 10.55 strike price. My total investment is about $3,000. Where is the dollar? Anyways, so this is my, and if I do a simple spread, I'm going to sell this and I'm going to get, it was minus 1.17. So I'm going to get 1117 back into my account. Okay, this is negative dollars. So my cost reduced to 1183, which was 3,000 to begin with. Now, if I make butterfly, what I'm doing is I'm buying 65 now, 10 lots for 0.58. which is $580. And I'm selling the same 117. So my net gain, which I'm going to get, this is the credit. And this is debit. Okay. So here you are getting 118 and here you're getting a credit of 537. So your net cost will be 1883 minus 537, which will be 1346. So now instead of investing 3,000, you are investing 1346. So if you are losing in a trade, this, and you cannot sell that trade, this brings back $1,600 to you.
So now, do you let it expire? I mean, sorry, that was the only question that I had. When you make the butterfly on a losing position?
No, next day, if I feel that yes, it's moving up or it has reached the support level, I try to buy these legs. Because the premium has decayed. The premium will decay on this and this and this and this. On both sides, the premium will decay and equate each other. So I try to buy them. So let's say tomorrow it opens at 1. This opens at 1. Okay. This opens at 50. No, this should open at 25. And this open at minus 0.5. All right.
Right
So
time to
here,
close this.
Thank you, Naval. So Robinhood allows you to do this, right? Webull,
Yes.
I was not able to do it for some
Yes,
reason.
Webull doesn't allow you. Robinhood does that, and I do all my fancy trades on Robinhood. Everything I try to do. I do verticals, I do spreads, I do calendars, I do dragonflies, all of them on Robinhood, because they do not keep margin hold for these trades.
Thank you. That
Otherwise,
helps.
I don't like Robinhood at all.
So Naval, at what point of time do you make this as a butterfly? Say, when I have few long calls that expire in July 17th, and some of them are negative 95% loss, right? So is it advisable to make those trades, long calls, as butterflies?
See, you need to make butterfly as soon as you are in 10% loss.
Okay.
If you're in 10% loss and you're not sure whether the stock is heading into the right direction and you cannot sell it, only then make butterflies. If you are in 10, like stop loss should always be 10 to 20% of your stock price. If in option price, stock prices will be too much. If you see there is a support, then there's no need to hold on to an option. Like if you see, some of the times I put a stop loss on the alerts and some of the times I don't. Because when I know that there's going to be a move and there's going to be an opportunity to buy the dip, I will never put a stop loss because it is going to eat your stop loss. If I think that, yes, I'm trying to do a kind of breakout trade where I feel that if it breaks out, it will move up, I do put a stop loss, because if there is a failure of the breakout, it might hit and go down, which I've shown you in the charts as well, that yes, if there's a breakout, it moves up, or there's a possibility that it tries to touch the support again. So for those cases, there are stop losses. For everything else, I don't put the stop loss.
Hey, Naval.
Yep.
Hey, Naval, this is very dumb question. If everyone is following charts, trends, like different indicators, then who will be the other side in the game?
See, that's what I'm saying. The objective of looking at a chart, I may be looking at the same chart, you may be looking at the same chart. But what comes out in your analysis and what comes out in my will be 100% different.
Okay.
It's how you look at the data, how you look at those numbers. Like, for example, let's say you are doing graduation, right? you got 60 percentile or 60 percentage. For some people, 60 percentage is mediocre. People who crosses 80, 85 percentage, they feel that yes, 60 percentage is mediocre percentage. People who are getting supplementaries or having exam failures, for them 60% is too much, right? The number is still the same, but the perspective of looking at that 60% is different. Similarly, the chart is still the same. The data is still the same. It is available to almost everybody. What plays out is your emotions. What plays out is too much looking into news and articles. That gives you a presumption mind that yes, this is going to happen. Second thing, your influence on your, meaning you are influenced by somebody. Initially, I used to be influenced by many people. I used to take good trades, but just because they are posting, not about this code, I'm talking about when I was in my early stages of trading, I used to get influenced and I used to lose too much. See, I did my analysis. I understood how it is going to happen. I know my levels. Even then, I was getting influenced by other people because I think they are much more experts than me. No, if you are running through your own dollars, you are accountable for your dollars. Nobody is. So if you verify, and that's why we say due diligence, you verify before you take our word. You verify whether it is putting right on your chart, on your analysis, compare to it. You might miss 10, 15, 20, but if you do a paper trading of those trades and try to verify that yes, this was the course of action I should take when something like this happened, next time when it happens, you're going to ride on it and you will make much more dollars.
Okay, thank you.
Hey, Naval, this is Surendra. I have a question.
Okay, guys, we need to be quick because it's already 2 hours and I'm feeling thirsty.
You know, we see like many trades from you. How do you get this time to lock in so many? Just curious to understand. Please explain if you can.
Again, like as I said, I do my analysis in the night. That yes, I'm going to look for these stocks. Next day, when they enter that zone, I try to enter them. I do not look at the stocks at that moment. Because when I do my analysis in the night, I have no news, no article, nobody's influencing me at that time. I nobody's trade. I have a clean mind at that time. I wrote down that yes, I'm going to look out for this trade, and next day when they reach that level, time to move on, time to pick them up and ride on them.
And Naval, for the point number 13, daily trade cycle, I think what you said, like you will go through your own watch list and look at the night. Are you referring that as day trade cycle point here?
Yes, yes, yes.
Okay, and one last question is this swing arm. I like you said, you already covered it, but maybe the terminology is different. I did not understand what we are referring here as swing arm. Can you please show me?
Swing arm is a chart style. It's chart style wherein it's more picturesque to trade. But these zones, you need to understand that. For example, if I say 30 minutes, look at BA and look at the volume here. So BA was a sell at this moment when it was 194.95. It opened, and anytime it tries to touch the resistance, we were supposed to sell, 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 sell. But I did not because I was emotionally influenced in it. I had positions and I was trying to prove that my data is wrong and I'm right. And I'm being honest with you. And that's why I said, but anytime it went up, I tried to ride on it and then made benefit of it. So here, these resistance lines are there, and this was the daily support. And these are the volumes. This is the volume profile. So as soon as it hit the range, which is green candle here, I went long. We went long on the 200 call, which was at around 590. and it went up. It went up to 685, so I booked, and then I entered again because it was trying to push beyond this zone. Right. So Monday, if it opens above this resistance 183, 184, it should be in the positive zone and it should move up.
Okay, so we are referring the tool like the special tool, whatever you have here, the green.
This is there are versions of it. This is like if you go to the free version on that website, you can have that, but it will not have all the recent updates, all the new things. For that, you have to pay. I paid some dollars, and I'm trying to negotiate with that person so that we can come down the price.
Okay, I mean, what I'm referring is the zones, what is divided here into red and green zones. We are saying that as swing arm, right?
See, these are swing arms. This red, if you see the dark red line on the top, this is your arm. And here that arm got broke and the green arm got there. So when the arm got broke, we need to enter it and then remain long as much as we can until the red arm comes into the picture.
Okay, but this
it's
arms
a
will
way
come.
of trading.
These arms will come in any platform, or it is only on like.
Again, this is a tool. You trying to like jump into this. I'm saying wait into this. First, try to make your chart and then use it for the verification. Don't try to like run on it at the same time.
No,
First, you
not
need to have
that.
confidence in your chart.
I'm using the E-Trade platform and I don't have this kind. I mean, I'm not sure these tools are only for toss or something. So I'm trying to compare those things.
No, this tool is specifically for toss, and I think they were right for Trading View as well. But Trading View doesn't come up 100% like this. So
there is no way we can replicate this swing arm, like, or we can identify this swing arm in E-Trade or Robinhood, like other platforms, right? Is that correct?
You have to write a good amount of code. I can like show you that. Like there are so many scripts which are used here. All these scripts, right? So let's not jump into this. I am explaining you this because when I post a chart, I want you to understand what to look in for that chart.
Got it, bye. Thanks.
Naval, one question on Google. Actually, we traded that on Thursday and Friday, but Friday till 2 o'clock it was not breaking up, but suddenly after 2 o'clock it went very high. But we were not holding till that point. Is there any reason like it waited till 2 o'clock? Can we hold that? Can we find that?
I told that Google is going to make a new all-time high. I posted that, and it's going to run. But the point is, when you have so many positions, you cannot focus on that. For me, that was the reason I went out. Okay.
Okay.
Look at this chart. I was telling everybody that yes, Google will run, and it will run. If this is the 30-minute chart, here there was a buy signal which was confirmed. Every time it went up, it faced resistance, and there was a buy. Buy here, buy here, buy here, and then it went up. I verified it in my other charts as well. But the problem was that I had so many positions and didn't want to carry so many positions into the last hour on a Friday. So that's the reason. That's fine. We missed out, but yes, we can ride on it. Anytime it comes down, we're going to ride on it. 1530, this is the Fibonacci, right? I'll also show you the Fibonacci. The Fibonacci is right there, right? So it crossed 1530. So anytime it comes near 1530, it's time to ride on it. Buy and go long.
Yes,
because now it's going to touch on 1600, 1700 range.
Okay, Naval, can you see?
Looks like 1800, right?
Like it should be 161%. It should touch. I'm expecting a very good ER from Google. So let me see which strike price can be more useful, and we can ride on that.
So what's the time some leads on Google? Naval?
Guys, it's not a trading exercise as of now. It's just to understand the chart.
Okay.
Don't go into that direction where you will lose the benefit of understanding the chart. Don't go into trade execution as of now. Try to understand what a chart is. How does it confirms me that yes, I need to pick up a trade. If you have confidence, converting that confidence into an option trade, picking up the strike prices, we can very well do that. First, understand the chart, understand the setting.
So now one question.
Guys, I am going to be there for 5 more minutes because I'm literally tired. It's 2.5 hours now.
Yeah, I have
one last question. So whenever you had this chart or whatever, you see it buy confirmed or sell confirmed, then only you alert, or you go with support and then go with alerts.
No, this is a confirmation chart for me. I do my on Fibonacci half-minute candle charts, 30-minute candle charts, all of that. I come to this to confirm it, not to trade based on this.
Okay, but you have your own confirmation rather than support in that case.
Yes.
Okay.
And one more thing, going forward, when you post us the pick, maybe it would be better to give us that resistance, where we need to book at that one. So instead of setting a stop loss for these things.
I am not a full-time trader, so it's very difficult for me to be active, to reply everybody, and to put all that information.
Okay, I mean, what I meant to say is we are using stop loss and we are missing some opportunities. So that's why I thought of asking.
You have to position based on your own risk appetite. If you have $25,000, you should not trade options of more than $5,000 at any given time. So you need to make stop losses, make profits. I cannot define a profit range for you. As I said, if you're going to get a bump in salary for 15%, I'm not going to deny it. You're going to take it. So if you're getting a 15% or 20% or 30% return, start slicing and taking back to your home, into your account. Don't wait that, yes, one option will make me a millionaire. No, it's not going to happen. The only thing which will happen is if you book profit at regular intervals, 15%, 20%, 30%, put orders. As soon as you buy, put forward orders.
So one more question,
that in SPGAN lost a lot of profit, so that's the reason I asked.
See,
so that's the problem now. We buy
fear of 1 second. You lose profit because of the fear of missing the profit. If you book profit in reasonable percentage, if you play with, let's say, 5 lots, you book 1 at 25%, book 2 at 50%, book 3 at 75%. You will have 2 runners which you will run. You never do that. What you do is, I'm buying 10, I'm selling 10.
Agreed.
Yeah, problem is when we buy small accounts, only one option, then you see, oh, it went to 30 earlier, now it is at 15, let's not sell it, and then it keeps going down. You then hope it to make even, and
yeah, same thing. Because of small accounts, we are
miracle.
opening 1 or 2 options, and when you say book 25%, hence we don't have that money, we are booking.
Yes, let me reiterate. When you are losing an option of loss of more than 20%, sell it. If you cannot sell it, sell the strike price in front of that. Do not carry an option where you're losing more than 20%. Never average an option.
Yeah.
If you average 9 out of 10 times, you are going to lose.
Yeah, that's one big costly lesson I learned. I averaged MCD like anything. I have 28 calls now. But I keep averaging and I'm in a big loss. That's one big lesson I learned.
See, I've always mentioned never option. Always good to average a stock only when it is moving up. Never average a losing option. Never ever.
My problem is riding the hope till the last day, hoping a miracle.
See, nobody can do that. The goal is if you are able to make 50 to 100%, you should book it. Nobody knows. I gave you an example that I had NVIDIA and I was in 10 grand of profit. Monday morning, I don't remember, it was January of 2019. Monday morning, that CEO came on TV at 9:15, stock was 161. And I was thinking I should book my profit. It's above my strike prices. The stock opened at 131. So if I would have booked my profit on Friday, I would have lived a good life, relaxed life on Saturday and Sunday, and I do not have to face all this issue of lost profit and my capital. So you can never sell on top, you can never buy on the bottom. You should be, I'll say, thankful if you're able to make 50% or 100% on a single trade. Just
Yeah, I book
compare.
like on profit like 15, 20%, 30%, but when in loss, I wait till 70, 80, 50,
Because
thinking it
you
will
are
come back.
hoping,
Yeah.
you're hoping that yes, it will come up. The hope is really
Yeah.
bad.
Yeah, need to work on it. We'll do.
So
now I'll have one
make
question
stop
on
losses of 20%. Just make that as a rule. Stop loss should always be of 20%. If you cannot sell, make the butterfly. Do not average options.
Yeah, butterfly will be help because that was one of the main reasons why I was not selling. That if I sell this, I cannot anyway buy any new trade in that day. And then let's keep it and see, kind of. Yeah, we'll do that.
Yes, and don't try to chase an option price. If it comes, it comes. It doesn't, it doesn't.
So now, like when you say 20% in the options, right? Sometimes like the option quickly moves around, the prices would come down and it quickly rises, right? So sometimes we end up losing the 20% quickly and we sell it off. So what are the indicators we should look into that? Should I sell this off, or again, do we need to follow the charts?
You need to be mindful of the fact that yes, the stock is moving volatile, and the volatility is too much. Either you exit from that option or you enter with low volume and then leave it. You should enter the high volatility stock always with low volume. Like for example, Tesla, don't go by 10 lots, go by 1 lot at most or spread it most. Walmart, go by 50 lots. It will not be a wrong trade. Go with Bank of America, go with 100 lots. It will not be a wrong trade because they will give an opportunity to exit, and stock market always gives an opportunity to you to exit. Every time you were in loss, there will be a moment it will come to your cost, but the hope of making a profit from that stock is there, and we do not exit. Tell me that
100%
happens or not.
agreed. 100% agreed.
True.
Stock market always gives you a chance.
Yeah.
Our greed doesn't let us take that chance.
True. Thank you.
Naval, maybe in your last answer, right? So can you give some input? So how we are planning to take the 3K to 10K challenge? So that way we'll be prepared and we'll be cautious if any extra steps
So
need.
3K challenge, what I'm planning is I'm going to trade with 1 or 2 lots at most. Okay. And I'm trying to, this is just a challenge. Like I may be successful in it, I may not be. But the goal is if we are able to make, let's say 5 grand, 6 grand out of it, we are making 100% return. 100% return is any day, anywhere in the world is a must be a book scenario that yes, if you're getting 100% return on your investment, it's an ultimate decision to book the profit, right? So if we have those profit, we'll book that profit and will give us a salary that yes, we spent so much time in understanding this, this is our salary back. I want that to happen with everybody. We invest so much, and I am 100% sure 90% of the people here who are on the call are here because they are in losses, not there because they are making good money. If you're already making money, you know what you're doing and you know what works for you. All right.
That's true.
Going with naked calls, Naval, so because we are still learning how to do butterflies and other stuff on that challenge.
See, let me give you one more rationale here. When you become a doctor, you spend 5 years in graduating, 2 years into residentship. When you become a software engineer, you spend 4 years of degree. When you become a lawyer, you spend 5 years into the education. When you become a trader, just because your friend said so, next day you are the trader. You don't spend time to understand it. You don't spend time to understand what will happen. And I'll again back up my statement. Many people think themselves that yes, they are good expert because market is moving in one direction. If market is moving, let me tell you that in the graph. When market was going here, boom, boom. 1 second, man. 1 second. 1 second. When market was going here, anything you bought will go up. Anything you bought will go up, right? But what happened here was, boom. All these people who made money here lost much more in this fall. And I can very well point to the fact that all the companies which you were buying right here, either you lost your premium, you lost because you have a habit to trade against that trend. Your trend was positive and you always follow that trend that yes, every time it goes down, I need to buy. But here you lost big. And when it started to move up, you have a fear that now it will fall more and you will lose more. You buy again. So at this moment, you tend to lose more. So that's what I'm trying to convey. Do not try to be an expert without your data backup. You should become an expert on your trade yourself. Nobody should be an expert on your trade. You entering your trade based on your data analysis, based on your understanding of the data, not on anybody's. Even like I'm posting something, I want you to go back, look into your data and see whether Naval makes sense or not. If it doesn't, don't take that trade. And tell me that, yes, Naval, you are making a mistake.
So now the counter trend, right? How do you project that? That's important, right? Especially going into February last week.
Very beginning. If you see the counter trend is when the trend is going in this direction upward. If you see my mouse is moving upwards. This is the trend. This is the trend.
Right. So then projecting the counter trend is the key part, right?
Yes. Right now there is, see, if you see here, there's a W pattern which is happening. See, there's a W. W is a breakout pattern.
Right.
Now I got this W on my swing arms. I got this W on my Fibonacci. I got this W on my normal candles. When this happens, it's gonna go up, breakout. And I should not be taking any positions counter trend. Yes. No, you can Google it. There's a W trend. Wait. W.
Yeah. You know, we all know, right? So.
No, most of the people
for example,
don't know about that.
Yeah. I think in third week of May we had a inverted head and shoulders too. So I think
yes. This is the pattern. Like it goes up. Right now we are here, somewhere here. Right.
Yep.
It's gonna go up. It's gonna face resistance at 32.40, which I've been asking or saying for a couple of weeks. My target is 32.40. So I'm expecting this 34.40 beyond. It should test all this. It may not happen in a week. It may happen over 10 days. It may happen over 15 days. But if it fails, the failure will be big. The failure is 2934. So you need to see whether it happened as a breakout or it happened as a breakdown or it failed. This everybody has to evaluate themselves. All right, guys. Thank you very much for letting me speak for 2.5 hours.
Wonderful. Thank you, Naval bhai. Thank you very much.
Thanks a lot for your time, bhai.
Thanks a lot.
Thank you so much. Tough us bugged you because you are really an expert. So that might most of us bug you a lot.
Thank you, Naval.
My goal is that I hope you are all you understood what I was trying to convey.
Thank you, Naval.
Thank you,
Naval.
Naval.
Thank you very much, guys.
But you have a lot of patience, man. Thank you very much.
Thank you, Naval. Thank you. Raghubai, you have the control now.
Okay, thanks, bye. It was a great session. Thank you very much.
All right. Thank you.
I will share the recording to everyone. Thank you.
Okay, thank you.
Have a safe day. Bye-bye. Bye.
पीता हूँ हैं पीना का मैंने कुछ कभी तो नहीं खाया मैंने कि हाँ पीऊँ 450 बंदा था कॉल
Hey, Naval, you're still on.
Yes, I'm trying to stop it. Can you share see my still I'm trying to leave this meeting.
Yes, Naval, we can see your screen still.
I've stopped share. Even then, it's coming.
No, now we are fine. Now we can.
Now we don't see it. Yep.
All right. Thank you.
Thank you, Naval.
Thank you so much, Naval.
Yeah, thank you, Naval.
Much.
Thank you, Naval. Bye.